Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading sessions. First up, coming to the rollover data. Yesterday we had the monthly expiry, that is the June series expiry for Nifty. Let's have a brief look at what the data has to say. In the June series, Nifty futures has witnessed high volatility as it has traded in a range of 2,796 points, which was the highest after March 2020. However, despite high volatility, the index has marked a fresh all-time high. It's worth highlighting that the rollover for the Nifty index futures was significantly higher at 76.25 compared to the previous month of 71.76 and the 3-month average of 71.04. The number of shares rolled marginally improved to 151 lakhs as compared to 144 lakhs last month. Moreover, the rollover cost has witnessed a minor dip to 0.24% as compared to the 3-month average of 0.57. Now coming to Bank Nifty. So the Bank Nifty futures has also witnessed high volatility in the June series as it has traded in 7,036 point range. However, it has strongly outperformed the Nifty index and marked a fresh all-time high. So if you see, the rollover for Bank Nifty futures has slightly improved to 70.68 as compared to the previous month of 67.66 and 3-month average of 70.92. Moreover, the rollover cost has decreased to 0.3% compared to the 3-month average of 0.77. Let's have a look at the market-wide rollover. So the market-wide rollover stood at 90% compared to the previous month average also of 90. So more or less the market-wide rollover generally tends to remain steady around 89 to 91%. If we see in the last series, the long short ratio based on the FI index positions has shown a notable uptick, which is currently at 81.72%, which is the highest in the last couple of months. For the next weekly series, notable call open interest is observed at 24,200 call, followed by 24,500 strike. Meanwhile, on the put side, if we see, open interest concentration is witnessed in 24,000 put, followed by 23,800 strike. Potential outperforming sectors based on rollover data. So we have automobile, private banks, financial services, capital goods, IT and pharma, which are expected to do good. Potential underperforming sectors based on rollover data. So PSU banks, CPSC, PSC, these are some of the sectors which are expected to underperform. Now coming to the technical data. So during the month we have seen that the index has marked a low of 21,281 and thereafter witnessed a sharp upside rally of nearly 13% and marked a fresh all-time high of 24,087 level. On the monthly scale, it has formed a bullish candle with long lower shadow. As the index is trading at an all-time high, all the moving averages and momentum-based indicators are suggesting strong bullish momentum in the index. The daily, weekly and monthly RSI is in super bullish zone as per the RSI range shift theory. Going ahead, 23,650, 23,600, this is from a positional perspective, that is likely to act as a strong support for the index in the short term. As long as the index is trading about 23,600, it is likely to continue its positive momentum and test the levels of 24,300 followed by 24,700 in the next couple of weeks. While on the downside, if we see, if there is any sustainable move below the levels of 23,600, it would lead to profit booking in the index. In that case, it could test the levels of 23,350, 23,300 levels, which would be the next support on the downside for the index. Talking about Bank Nifty, so for the month, we saw that the index hit a low of 46,077. The index from there has surged by over 14%. Along with this rise, the index has given a rising channel breakout on the weekly scale. Also, it has marked a fresh all-time high. Despite of the high volatility, the index has strongly outperformed frontline indices. The ratio chart of Bank Nifty as compared to Nifty is at a 5-month high. So going ahead, the zone of 51,900, 51,800 is likely to provide cushion in case of an immediate decline. As long as the index is trading above 51,800, it is expected to continue its positive momentum and test the levels of 54,000 followed by 54,600 in the short term. While on the downside, if there is any breakdown below the levels of 51,800, it could lead to a bit of profit booking in the index up to the mark of 50,700 in the short term. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.